Hi guys, in this video, we're going to highlight the factors affecting the pricing of commercial real estate. Now, the demand of commercial real estate investments over the past few years has been increasing. And there are so many factors that affect the prices of property, including the demographic analysis. The demographic analysis include the study of the population based on age, gender, race, income, and the population growth. And in this video, we're going to discuss all the other factors that are needed to be considered when deciding when to invest in a commercial real estate piece. And hi guys, in this video, we're going to be highlighting the factors affecting the pricing of commercial real estate. Now, the demand for commercial real estate investments has been increasing over the past few years. And there are so many factors that affect the pricing of property, including the demographic analysis. The demographic analysis includes the study of the population based on age, race, gender, income, and the population growth. Now, in this video, we're going to be discussing all the other factors that are needed to be considered when deciding when to invest in a commercial piece of property. And there are four primary factors that affect commercial real estate prices. That first is a physical factor, second, economic, third, demand and supply, and fourth, the government factors. First, the physical factors. The physical factors include location, infrastructure, and the condition of the property. The location of the property is by far the most important factor in real estate. It's all about location, location, location. Buildings or properties located in a commercial area are fully developed areas where the population is high are going to hold a higher value than other areas. Additional factors that increase the appeal and demand for a commercial piece of property include such things as direct access to the main road, a lighted intersection, if there's other businesses that will attract the same target consumers in the immediate area. And buyers will also look at such things as a school or colleges in the area if the buyer likes to be close to a shopping mall or a big box retailer such as a Target, or maybe near a highway or major thoroughfare. It's also important if there are utilities and water at the site or close to the site where they could access proper connection. Some buyers and tenants also want to know where public transportation may be for employees, or they could also be near medical facilities should they have a medical service. Now, another physical factor is the infrastructure of the property and building. The quality of land and structure of the building are so important. This will include knowing if the property is close or near to a sinkhole or within the 100-year floodplain zone, for example. All well-designed buildings find more buyers in comparison to badly designed buildings for obvious reasons, but that goes for land as well. Should the land's boundaries have an awkward layout or access is poor and require additional funds to get to the property because you have to build a road or even a bridge, it's going to include these factors that need to be taken into consideration. And the property must also be well maintained and well designed so that the HVAC, electrical, and water can be operated efficiently. Now, the buyer must consider all of these points before purchasing a property because the layout, design, and quality of the infrastructure are all going to play an effect into the resale or if the viability of tenants to lease that space. For example, I've heard a lot of multifamily properties that have been built on wood rather than concrete, and that has raised a lot of concerns as to high humidity and long-term effects of the value for those particular properties. Now that leads us to the last physical factor, which is the condition of the property. The condition of the property can greatly affect the price because the property it could be in a great location, but not be well maintained. And then the cost for repairs can greatly affect the sale price of that asset. Now, the second factor affecting commercial real estate are the economic factors. These include the market growth or lack thereof, supply and demand, unemployment, and interest rates. Now, first, the growth of the economy plays a major role in the price of real estate because with a higher growth in the economy and less inflation, people can earn more money and people will consider spending more money to buy a piece of property. Now, in the first wave of COVID, the prices of real estate went down. Why? Because of the recession, people were losing their jobs and not able to pay their mortgage payments. But then the government started printing money, which caused huge inflation. This flooded the economy with cash and people started spending. This caused manufacturing and prices of goods and services to increase significantly. So that first COVID wave, when prices went down because the economy across the world were not performing well. But when they flooded the market in the US with money, so did the prices of real estate and everything else increased. Another economic factor that affects the price of commercial real estate is the supply and demand. Supply and demand has direct correlation with the value of the property. If properties are in a high demand area, but the supply is fixed, then the price of the properties will increase because more people are willing to buy. Now, the southern states have seen this directly as people have moved and flooded the Florida and Texas markets shortly after the quarantine was lifted. Unemployment is another economic factor that we need to take into consideration. Unemployment decreases economic growth, and if there are more job opportunities in the market, people can earn enough money to afford to buy a home or any other type of asset. But if they don't, then they can't. So the last economic factor is also that we need to consider is interest rates. As mentioned earlier, when the government started printing money, they flooded the market with cash. But now the interest rates charged on a loan is higher, which means that monthly mortgage repayment is also higher. Therefore, the interest rates are higher and less demand for real estate is observed. Only a few people can afford that. On the other hand, an affordable interest rate, which means lower interest rates, create good demand for the real estate industry. And the final primary factor that affects the commercial real estate market is the government factors. This includes government policies, government administration, and employees. Social factors are also included in this bucket. First, the government policies, which continue to change. For instance, the policy which allows non-residents to buy housing or commercial assets allows really offering subsidies to needy people. These policies increase the demand for real estate for both housing and commercial property. And then we got to look at the administrative government and their employees and where they're located. When a property is near an area where there are many facilities that require government employees and contractors, that's going to affect the affordability of that area. Fully developed areas are always of high demand, and government employees attract to buy a house near this type of area, and government may also provide living quarters, which could possibly affect the commercial real estate industry. Another government factor is the social factor. The size of a family and their culture will determine what size, location, and amenities they are seeking. This is going to affect the commercial real estate business and what exactly is going to go into that market. Another social factor is the crime rate. If there's an increase in the crime rate in a particular area, people will not feel comfortable investing in that area for fear people will not want to visit the businesses or buy homes in that market. Lastly, the population growth is a huge social factor. In any particular area, if there is an increase in population, which leads to an increase in demand for the property in that area or city commercial property, pricing will also increase. So just to summarize, we've discussed the 4 primary factors that affect most in changing the pricing of commercial real estate that you need to consider, which are the physical factors, the economic factors, supply and demand, and the government factors. The broker and investor must conduct the proper research and check all the criteria when reviewing a commercial piece of property. By evaluating the factors mentioned, you can get a really good idea as to what to consider when investing in a commercial asset. Till next time, my friends, I wish you luck.